Hi, we're Rick and Robin Lemons. We're real estate agents with Coldwell Banker King Thompson Realtors in Columbus, Ohio, and we specialize in helping homeowners who've gotten a little behind in their mortgage payments. We do understand that bad things happen to good people. Uh, what we want to do with this video is help you understand what your options are, which can include a loan modification or short sale or a foreclosure. Keep in mind, we're not attorneys, we're not dispensing legal advice. The information we're sharing with you today is based upon our experience in working with hundreds of other homeowners who have been in the same situation over the past few years. So let's get started. First of all, Robin, what is a loan modification?
A loan modification is when the lender and the borrower agree to terms that are different from the initial loan. The borrower does need to be qualified, though.
Okay. And a short sale? What's that?
Short sale is when the homeowner sells their home for less than what they owe on their mortgage.
All right. And now foreclosure.
Foreclosure is a legal process where the bank attempts to get the debt repaid to them. It can have consequences such as a sheriff's sale or even the homeowner getting evicted.
Now, what's this deed in lieu of foreclosure?
Deed in lieu of is a voluntary action by the borrower to give their house back to the bank. They do need to be in default.
And default, what exactly is that?
Default is when the homeowner or the borrower is 30 days or more late on their mortgage payment.
Now, I've got a client who is getting a job transfer and will need to sell their house. But again, they're going to owe more than what they're going to be able to sell the house for. They're not in default. Can they still do a short sale?
They can still do a short sale. It really depends on the lender. The majority of lenders do require the homeowner to be in default. There are some smaller banks that do allow the homeowner to be current. The best thing to do would be to check with your lender and see what their policies are.
Well, I imagine being late on your mortgage probably affects your credit. How does a short sale or a foreclosure or even a deed in lieu of foreclosure affect the credit?
A short sale affects your credit by around 50 points. The good part is that you are able to purchase another home in around 2 to 3 years. A foreclosure, on the other hand, affects your credit by around 200 points, and it would take 6 to 7 years before you could purchase another home. A deed in lieu is similar to a foreclosure, but not quite as bad because the homeowner is at least taking responsibility in taking action and giving their home back to the bank.
Okay. Well, folks, to summarize, a loan modification would allow you to stay in your house. A short sale allows you to salvage your credit and own a home in the near future. Foreclosure or deed in lieu of foreclosure should be treated as a last result, and basically that means you've given up and aren't taking any sort of action. So one of the things you need to do, if you haven't done so already, is contact your lender if you are behind. If you need some additional advice or have some additional questions, feel free to contact us. A couple different methods here. Number one is we have a website that answers a lot more questions. It's called ColumbusShortSaleRealtors.com. You can also send a specific question to us at stopforeclosure@rickandrobin.com, or you can call Robin directly at 614-741-2495. All calls are confidential, but please make sure you take some sort of action. Hopefully this information has helped you out today. Thanks.
Bye.